Just explain broadly what the government is proposing, even though it hasn't become concrete yet. What's being considered?
Well, if I could just add one thing to my intro, I also had a company called, I'm at a company called 1013. We have 700 angel investors in a syndicate. So this is, we talk to a lot of angel investors every day. What the government is proposing is to essentially change the bar where the cut-off for a sophisticated investor occurs. Currently, that's roughly at $2.5 million in net assets and $250,000 in earnings in any 2-year period.
So that being the case, if they raise that bar, that means that there would be potentially fewer people in the pot who could fund some of the ideas that your investors currently are looking at. That's
correct. And the important thing to note here is we exist in a global market for innovation and tech and investment. And our overseas competitors, the US, for example, and the UK, have far lower bars than that, depending on its income or assets. So we are already high, and any plans to make us higher will not make us more competitive. The interesting thing I noted in some of the submissions to basically raise this bar were that people who are wholesale investors were exposed to potential danger. But I did note some of the examples that they had, like Trio Holdings. It collapsed 6 or 7 years ago. And if that's the only one example you can come up with, and that was retail and wholesale investors, then really, who's doing the job properly here? Because there is risk involved in this and there is failure involved in this. If you assume that the government should protect investors from risk, and I don't, but let's assume for the argument that you do, then the purpose of the wealth bar is to ensure that person has enough resources, for example, to get advice or potentially sue the person afterwards for a breach of contract. So in essence, it's a gold card rule. You're probably rich enough to get the right advice. You're probably rich enough to withstand if it fails. And that's the essence of it there, if you believe that's required. I personally believe if you can make a bad real estate investment or you can put $20,000 on a horse race, you should keep out of startup investing at the same time. Yeah, well, 100%. So therefore the notion of caveat emptor, let the buyer beware, is alive and well in this market. The people who are investing have to be going into it with their eyes wide open because they recognise there are limited protections. Exactly right. And there's a very well understood, in the startup world, there's a very well understood strata or framework of documents that pretty well no one strays too far away from, to be honest. Subscription agreements, deeds, and all the rest of it, shareholders agreements. And they handle most of the risk. If you've told us lies, then we can do this. So there's a whole series of adults making voluntary decisions to buy equity in a business, to fund that business. But the important thing is almost not the loss of equity and not the loss of capital invested in. But what the angel and the smaller investors typically do is to leverage that capital. They bring their own advice in. They become mentors or board members or advisors. And that doubles or triples the impact of their capital. Would you do that if you couldn't invest to make a profit? Probably not. So not only the loss of capital, but the loss of just an amazing number of individuals who have incredible commercial and entrepreneurial experience. OK, so the Financial Services Council, for one, wants the bar lifted from $2.5 million to $5 million. Why would it be that the Financial Services Council is arguing in favour of raising this bar? No, follow the money. They're obviously impacted somehow by the current situation. I don't understand it. I look at global competitiveness. We are competing against the US and to a degree the UK. But if you look at it in terms of defence and AUKUS, definitely very much. $400 billion spending in the next 30 years. There's going to be a lot of flows that way. So we have to be competitive with those markets. The UK is well under $1 million in adjusted dollars, I want to say, with respect to the assets, although it doesn't include the family house. So there's some variation there. But our global competitors are well below where we are now. Why would we make ourselves less attractive? It's mind-numbing. OK, so then you come to the point about this is a government also that says it wants to be a nation of innovators. It wants to have people who are higher paid because we have created innovation and harvested it here in Australia. This seems to almost be counterproductive to that objective. I 100% agree. The one thing that occurred in 2016 under Malcolm Turnbull was a scheme under the NISA scheme, National Innovation Science Agenda. He introduced, sorry for the acronyms, introduced a scheme called ESIC, Early Stage Innovation Company, which promoted and encouraged people to invest in this asset class who were sophisticated investors. And there was some substantial taxation benefits to do so. That has supercharged this sector, but it's not just that capital. It's capital backing smart people with experienced advice on top. It's a three-way whammy that we will lose if these changes go ahead. OK, so the changes are proposed. They haven't yet gone through. They're not concrete.
So what needs to happen to have the industry push back to kind of teach the government in some ways that it's not the right way to go?
Well, one thing we did at 1013, I mentioned before we had almost 700 investors in our network. We did a survey earlier this week. I think the results got released yesterday on LinkedIn. But we had 54% of investors believe they would be impacted by this change. Impacted means they no longer qualify as an investor.
Yeah. Which means the capital then is not there, the businesses are starved, the ideas are starved.
I thought it would have been 20 to 40%. 54% made my blood run cold. That's a lot of experience taken out of this sector when we have to compete. We have to get out there and innovate and outcompete the world.
I'll tell you what, it's going to be interesting just to see how it goes. We might put this to the Assistant Treasurer, Stephen Jones, who's got passage for this anyway. But in the meantime, Steve Baxter, many thanks for your time.
Thanks, Ross.